Very good evening and welcome. You're watching the India Development Debate. I'm Tamanna Inamdar. Our focus this evening is going to be on the auto sector, which has been having quite a good run recently. Now, numbers for June were put out by FADA, that is the Federation of Dealers. Automobile retail sales, as per these numbers, have registered a 10% year-on-year growth for the month of June, with positive performances seen across all vehicle categories. Data shared by FADA says that two-wheelers, three-wheeler, passenger vehicles, tractors, commercials have all seen good growth. We've seen about 7% in two-wheelers, 75% in three-wheelers. So three-wheelers have been the real star, 5% in passenger vehicles, and so on and so forth. But the FADA press release, while putting out these numbers, also talks about concerns in the two-wheeler category, especially keeping in mind that monsoons have had a late start. We're going to be talking about the outlook for the sector and whether it's really seeing a kind of now more secular growth as compared to what we've been seeing in the last few months, where two-wheelers and lower-end vehicles have not been performing as well. But let me first begin by welcoming Manish Singhania. He is president of FADA. Mr. Singhania, thank you so much for speaking with us on the show today. Let us first begin by getting some details of the numbers. How have the sales been for the month of June?
A very good month for the auto retail industry. So overall, a growth of almost 10% for the whole industry. The best part were the passenger vehicle, tractor and three-wheeler segments. These segments reached a new high for the month of June, and there are record numbers coming in. Good part is also in the two-wheeler industry, where the performance has not been quite well, and we are not seeing a good recovery even on a month-on-month or a year-on-year basis. But that too also grew by almost 6-7%. So that's a very positive note on two-wheeler segment. Though the two-wheeler segment continues to degrow by almost 13% compared to a pre-COVID level, but overall a good across the segment, a good month for the auto industry.
What about the impact of new launches? We've seen the number of new launches increase exponentially, really. Has that been enthusing customers, and have you been seeing an impact of that on the sales numbers?
So it would be too early right now to comment on it, because it has just been launched actually, and the effect will be seen in the July and August months. But yes, overall the excitement is there in the PV space, especially in the PV SUV space, and we dealers are already carrying a booking in number of models, and the waiting periods are close to 2 months to 1 year. And a few models. So, and this new model launches will further attract and further create excitement in this segment. This segment has been moving very good. Numbers have been rolling in post-COVID in this segment. SUVs have been a great attraction, and the buying and booking is repeatedly coming in. Even getting such a good number in the month of June. That reflects that in the coming festive season, which will start from the end of August, we can really expect good numbers coming in for the overall year.
Answered my next question, but I will ask it nevertheless. We've seen a better than expected May and June. The first quarter is pretty much over. What is your outlook for the rest of the year? And is it hinging mostly on what performance we see in the festive season?
So, if we go segment-wise, passenger cars have registered. They are at a already at a very high level. They have created a new record in last financial year in terms of retail volumes. So, at FADA, we predict a single-digit growth across passenger car segment because I think the supply chain woes and the semiconductor continues to plague this segment, and we are eventually still in short supply for high-end variants of a lot of models. The two-wheeler industry, we have strongly advocated with the central government for reduction in GST from 28% to 18%, because this is the only segment which has not really revived after the COVID times, and the uh, cost of acquisition has gone up by almost 50% in two-wheeler, and plus cost of operation is also pretty high in terms of EMI and fuel cost. The rural economy continues to be under stress. That stress can be seen in the entry-level passenger car models and also two-wheeler, especially motorcycle space, which constitutes almost 70% of the two-wheeler industry. So yes, two-wheeler, we are kind of apprehensive. We are only seeing growth and spike in buying in two-wheeler space only during festive months and maybe wedding seasons. But overall, it has been a kind of subdued segment due to the rural distress that continues to plague the Bharat of India.
Indeed continues to be concerned. Thank you for that so much, Manish Singhania, FADA president. They're breaking down the numbers that they put on today. But we're taking that conversation further. Hormazd Sorabjee, editor, Autocar India, is with me on the show. Gaurav Vangaal, associate director, S&P Global Mobility, joins us today. And I'm also speaking with Abhijeet, Sinha, a program director at Ease of Doing Business. Welcome to all of you, and thank you so much for speaking with us. It's been a while since we've, put the lens on where the auto sector is going, and that was a good sort of base that Mr. Singhania said there. Hormazd, would you say that that's sort of the story, the theme that we've been seeing over the last few months, where some segments, your high-end segments, your premium segments, are really seeing a boom, while the bulk volume generating sort of segments, and he spoke about two-wheelers, still have a bit of a problem?
Yeah, absolutely. I think actually Manish summed it up quite well. And I think I would reiterate what he said is there are certain models, let's say the Innova High Cross, for example, crazy waiting period of it over a year. Semiconductor supply issues still plague certain companies. In fact, even Maruti Suzuki, they continue to say that, they are kind of supply constrained in this regard. But again, I think going forward, the base effect will come into play. We are already at a very, very high level. So further growth will be very incremental. I think single-digit growth is what we can expect at best. And, there are still a lot of speed bumps along the way. And I think also, just the cost of acquisition, as Manish said, has become very expensive. And, the mobility is getting more and more expensive. It's not getting cheaper by any standard or benchmark. And that, again, also will have some sort of impact. But I think we can hope for the new models which are coming. All of them are SUVs, no non-SUV right now. That really is the flavor of the month. So
exactly. In all categories, in the two-wheelers as well, we've seen that sort of attempt to, and I'm going on a limb and quoting here, rob the bank as far as premium segments are concerned. Now, just give us a sense, Hormazd, before I move to the rest of the panel, of what are we talking in terms of percentage of vehicles in the market out there? Is there a lot of focus on this premium segment, and how big is that as a share of the total pie?
Are you talking about the two-wheeler?
Two-wheeler, yes, and for the four-wheelers as well in the premium segment.
Yeah, well, I don't know the numbers offhand. I think Gaurav who's on the panel, would be best placed to tell you that later. But I think what we are seeing is we've never seen this sort of intensity of competition in this segment. I think clearly, if you look at it, the Harley X440 and then the Speed 400 from Triumph, which Bajaj launched, super competitively priced. In fact, the Triumph 400 is even undercuts even Bajaj's own Dominar. So, you really wonder, this is a very, very aggressive pricing strategy. Of course, they're all going after Royal Enfield because, it's been kind of, it's got a very, very enviable position, which people have been trying to break into. Clearly, I think Royal Enfield also, for the first time, I think is going to have some serious competition. You've got bikes like the Classic 350, which I think has a sort of like a cult following. That's one thing. But there's Classic 350 and the rest of Royal Enfield, so you've got other bikes, the Adventure, the Scram, the Hunter, all of them, which will, the Himalayan, which will, I think, looking at the pricing of these bikes and the value they offer, there could be some, let's say, they could grab sales over there. So really, it's It's and the launch within 2 days of each other, they've really grabbed the headlines. So this
Yeah.
really is the flavor of the month.
That is the flavor of the month. But I'm going to come to Gaurav first for your opening, overall comments on what is the trend that we're seeing from the June numbers. Is that sort of disparity in sales growth now beginning to show? And the focus on luxury, premium.
So thank you, Tamanna. Let me start with the fact that when we first spoke this year, we were forecasting around 5 to 8% for the Indian numbers for the LV side. Fortunately, this was a smooth year. This was a smooth ride till now, and whatever we expected to the market to behave, market has behaved like one. If we talk about the inventory, we expected that inventory has to increase in the second half of the year, and I think inventory has already shown the early signs that they're on the higher side. We also talked about the inflationary pressures that we are going to receive in the second half of the year. I think till now we are doing well, but I think we are going to face some inflationary pressures in the second half. The one thing which Mr. Singhania has mentioned, that they're hopeful they're very optimistic of the festive season, but I think festive season will be critical for us. Demand has already started showing some weakness in my view, and I think the pent-up demand is already saturating. We have the backlogs available, but I think which Hormazd has also mentioned, that there's a high base effect is going to come into the play for the next 6 months. More or less, market looks very optimistic. We are going to post 5 to 8%. What we have mentioned with the start of the year, we are still there. But the only worry I have is the another side coming from the stable supply chain, right? I have a worry with the supply chain right now, because yesterday, I think 2 days back only, China has imposed some restrictions on some of the raw materials used for the semiconductors. Now this is expected to. We are monitoring the situation right now, but yes, this brings some worry to us for the auto sector also. On the premium side, what you have asked, yes, there is a huge demand. I think they are doing relatively better than the sub 10 lakh market. They have more things to absorb. They can absorb the inflationary pressures. I believe that market is going to behave in a two dimensions, like one towards the sub 10 lakh and other one is towards the above 20 lakh. And above 20 lakh looks very strong right now. We have the waiting periods, very high waiting periods, and I have seen consumers, those who are ready to pay premium also to get the early deliveries. So this is something amazing we are receiving. But yes, overall we expect market to get softened up in the next 6 months, but we have positive. I'm going to talk about in the later one, but yes, we have some positive also coming from the export also.
All right. So the export part of the puzzle is definitely interesting, and we look at that. Abhijeet, and I want to come to you on why we are still stuck with these global supply chain issues, and waiting periods of close to 1 year is quite astonishing. What do you make of this sort of choke up that we're facing?
Well, I think not only conventional automobile sector, but also electric mobility, both of them, they are going through this. And particularly the semiconductor segment has troubled a lot. And as what can be done and what kind of impetus or support can be given from Ministry of IT for local production of these components, which we have been buying from other global countries, is in place. All kind of support which can be given for not only passenger vehicle, local commercial vehicle, but also for the overall logistic infrastructure of India. It is in the place, and we are not looking at only 4 to 5 year paradigm, but we are also looking at next 10 years where we can leverage and where we can get some of the benefit. Particularly in percentage, in numbers, if you'll ask me, current logistic cost is around 14% of what we are paying. The Ministry of Road Transport and also other core ministries, they have their target to bring it into single digit, around 8 to 9%. So this particular reduction into logistic will not be possible until and unless we have a good flow of what supply chain components we are expecting from other countries. And internally also, if there is not a very ease of doing business and a very supportive environment for auto industry, as well as the emerging electric mobility and the hydrogen
You
industry,
feel that,
is
Abhijeet
created.
Sinha, because I think the last chat we had was around, Elon Musk and Tesla, and then they had that meeting in the US, and Elon Musk came and said, we're trying to get into India as soon as possible, etc., etc. Do you think ease of doing business is still an issue?
Ease of doing business is not an issue. Issue with the transport and mobility sector, what usually comes in that it is changing its paradigm. It was earlier only focused on the vehicle. So there were certain subsidies which were focused on the faster selling of these vehicles. Usually, popularly we know them as FAME. Now it has divided the focus of the industry, and the requirement of industry has changed to that we don't wish to be dependent on China or any other country. So we are started developing our own batteries. Then industry is also going away from the conventional manufacturing and the conventional way of buying a vehicle by the emergence of fleet operation. So fleet operation is also one of the business model which is coming up very, very strongly. And in coming time, it is not only limited to passenger, it will electric and hydrogen, they will also be coming into freight. So any new emerging technologies, they have their focus, and it changes wayside. We have to again change our policies and make sure that all component and entire dynamic of the industry is fully supported.
I want to talk a bit about two specific segments. I'll come to you first. Three-wheelers, of course, have seen, a great number for the month of June, year-on-year, 75%, back to being above your pre-COVID levels. And also what's happening with EVs. I'm curious about that, because I suppose this is the first couple of months where we'll see the impact of the FAME subsidies being withdrawn.
Unfortunately, we do not cover the three-wheeler and the two-wheeler market, so it will be difficult for me to comment on it. But yes, overall EV scenario for the passenger vehicle side, we are still optimistic, and we are expecting a lot of product action in the short term. We are already expecting the EV penetration to increase from 2024-25 when Mahindra and Maruti is going to enter the segment for the PV side.
Okay. Hormazd, I'll come to you on, the impact of the withdrawal of FAME subsidies. Do you see that sort of spoiling the party?
Well, we've already seen the numbers, and impact is already there. There's a direct correlation to it. Definitely it does, because, especially two-wheelers, which are so price sensitive, definitely there will be some demand impact. Now I think it's down to the two-wheeler manufacturers, how much they can absorb, how much they can pass on, I think, to eke out more manufacturing efficiencies. But fundamentally EVs are expensive across the board, and the most expensive component still continues to be the battery. We have to import the cells. We are doing a lot otherwise, making the packs internally, the BMS and all that, but the cells are still being imported. We don't have a manufacturing setup as yet. Raw material prices, again, of batteries, they've not plummeted the way we had thought it would. So yeah, the bottom line is EVs are expensive. I think what's still helping, and I think that's really the big one, is sustaining the 5% GST. Because if that's removed, I think demand would really collapse, especially in the PV segment, where I think with the help of 5% GST, there's a lot of growth, and you're getting some sort of cost parity between ICE and EVs with this differential GST structure, which goes from 5% and for the big cars all the way up to 48%. So that does help. So again, clearly, regulation playing a very, very important role in driving EV demand across all segments.
Absolutely. And we'll have to wait and see that, because the EV story has been an exciting one so far, though on a very low base, but the numbers, the percentage growth looks great. Will that sustain is really the big question. Thank you so much to all of you. Thank you for joining us on this sort of health check we're doing on the auto sector today as the FADA data comes out.